Today's market call is presented by CME Group, where risk meets opportunity, and FactSet, financial data and analytics powered by tomorrow. Sunny day here on the East Coast, December 16th, Tuesday, 11 a.m. on said East Coast. I saw something last night, Dan. By the way, this is Market Call. Gee whiz, Dan Nathan. Where were you last evening?
I was at the Ranger game. The world's most famous arena.
Yes, it is the world's most famous arena in New York. By the way, that opened in 1969, I believe, was the opening of said arena. It's been there, obviously, ever since. They've done some refurbishing. They've added some things. It's a wonderful place to see a hockey game.
Mm-hmm.
Rangers played Anaheim, the Ducks, playing well this year. Jacob Trouba on that team. Also, Chris Kreider. I'm sure you saw the emotional tribute they did to Chris Kreider during a stoppage of play.
Yeah, and Trouba got a little something, but not like Kreider.
Trouba's got some love, but because Kreider, Kreider grew up a Ranger. He showed up on the scene, I think, in 2011. I mean, storied history with the Rangers, but he sort of wore out his welcome. The reason I bring this up, I've been watching hockey my entire life. By the way, Amanda is doing great, and this is Market Call, and we will talk about the markets. I've been watching since 1971. My favorite Ranger to this day is John Rattel, number 19. They finally, after years, I don't know what took them so long, put his number in the rafters. By the way, I sent letters and emails begging them to do that. I've also did it for Vic Hadfield, who subsequently had his number retired, and I'm waiting for Brad Park's number 2 to be retired, although people will say it's already been retired vis-a-vis Brian Leach, but you get my drift. Last night, the Rangers were on a 5-on-3 power play. In other words, the Anaheim Ducks had 2 players in the penalty box, 5-on-3. The Rangers gave up a shorthanded goal, up 2 men, which I got to tell you something. I'm certain it's happened before. I'm certain I've never seen it happen. That is effing embarrassing. Dan, thoughts?
The world's most favorite arena, the folks in there were silenced. I mean, like silent. Absolutely silent. It was, listen, a lot of folks were walking out of there shaking their heads like this, just shaking their heads.
G Swizzle was not there, but I was shaking my head. Okay, enough hockey. Let's talk about the markets. And who do we wake up to each day other than our spouses? What do we like to do? What do we like to read?
I'm like
Mornings with Rosie. Mornings with Rosie. Come on. I mean, even friggin' Amanda knew. She fired it up. Okay. Early morning with Dave.
Now that usually comes out at 7:25. I've already been reading.
Apologize.
Whether it's Bloomberg or Wall Street Journal. I take a gander at the CNBC.com. I also read the FT. But early morning with Dave. So this is David Rosenberg, guy. You just call him affectionately Rosie. And so this was something you and I have been going back and forth about this. It's been my belief that it's twofold. A lot of folks will say, we've always had a lot of concentration in indices, this is no different. What's different to me about this is not just the concentration in the index, but it's also the effect on the economy. And it's kind of twofold, right? We've had this massive wealth effect that's been created by those who own stocks because of these 10 names, but they've also been a huge contributor to economic growth. Mm-hmm. Right, over the last couple of years. And I think some of the stuff going on between the two, between the markets and the economy, and basically the wealth effect for those who own stocks, that is unique in my opinion, okay? Because we've had outsized returns based on the spend that we've seen in around this secular shift. So when Rosie talks about the breadth here, so on December 11th at the peak of the S&P 500, less than 17% of the index actually made new highs. That was the lowest share of any interim peak posted in the last 25 years. Guys, 25 years ago, we had similar dynamics in the stock market, rivaling the 13% share at the prior tech bubble peak back in March 24th of 2000. Guy, I was on my honeymoon that day. I was in Bali, not to dox myself, in the middle of nowhere. I was very interested to see what the markets were doing. Do you remember the what was the Herald Tribune? You remember that? It was like an international paper.
Sure.
And the Herald Tribune used to cut off at 3 p.m. Eastern. And do you remember most of the action in the markets were happening 9:30 to 10:30 and 3 to 4 p.m. and it was driving me crazy. And there
So
was
you
no
missed out on your honeymoon. I mean, you should have been focused on just enjoying yourself. You're beginning your life together, yet you were focused on like Sun Microsystems.
Well, I will tell you this though, and I say this to all young people. I just said it. Do you remember Steve Rafis? You know our guy Steve Rafis?
He was in the running for the T. Wharton Award. Can you pronounce it for me?
Wharton. He's a lacrosse player, was a lacrosse player from Syracuse University, but he worked with us for years and he got engaged. And so shout out to Steve Rafis. And we met the other day, had a couple brewskis, guy. And I asked him where he's going for his honeymoon. They get married in September. And I said, don't make the mistake that a lot of people do. They go on these 2-week honeymoons. The last thing you need to do after you've been this full year of engagement is say, you know what? We just had this really stressful week and a half into our, wedding. Let's go on a vacation for 2 weeks. Let's look at each other, breakfast, lunch, dinner. What the hell are you going to talk about? Everything that you have done between those meals, you've been there together. There's nothing to talk about. Do you understand what I'm saying?
I do. There's a scene in, by the way, Amanda is still doing great. There's a scene in Pulp Fiction, and you may remember it, when Uma Thurman is in that establishment with John Travolta.
Yeah.
I forget what the name of it was, but look, people dress up like Marilyn Monroe and Jane Mansfield, and it's a wonderful place. Bill Hockman should open a place like that, and he could do stand-up. Anyway, at one point, Uma and John Travolta, show of hands, are sitting there, and neither one of them are talking. And then Uma Thurman makes a comment about, the uncomfortable silence, but she was embracing the fact that the two could sit there in silence and just enjoy each other's company. So some of the strongest relationships, although communication is important, are the ones where you can just sit in silence and just enjoy each other's company.
You know what that's like? That's like the end of The Graduate when they get on the bus, Elaine and Benjamin, and they just sit down and they look forward and it's silent. And what is Simon and Garfunkel? What is it?
It's The Sound of Silence.
Yeah. I just, while we're on Pulp Fiction, and I promise people we're going to get back to the market.
It's the holiday season. So,
all right. So we're at this concert. This is Saturday night. It's LCD Sound System. And
my God. You saw LSD Sound Systems at the Garden? Holy shit. That's unbelievable.
Our comedian friend Bill over here, he just cracked. He just broke a rib laughing at that one. And, it's very packed in there. It's standing room, and it's in this like old warehouse in Queens. And it's an amazing show. And this woman who's like within 4 feet of me won't shut the F up. Okay, she literally went there to like have a conversation really loudly. She wouldn't shut up. And finally I said, hey, listen, and I said it relatively politely. There's a concert going on over here, and I point up to the stage. You might enjoy it. And she shut up. But you know what I was thinking of?
I'm not really sure.
Remember the diner scene at the end of Pulp Fiction?
Sure.
When the chick is on the thing and she's like going like this and she's all nervous with her gun, and Samuel L. Jackson, Jules, says, tell that you know what to shut up. That's all I had in the back of my head. I was very polite. I wasn't like Jules, and I'm trying to be the shepherd here.
Right.
All right.
Trying real hard.
So back to what were we just talking about? Breadth in the market.
We were talking about
year 2000. Yeah. Okay.
Well, history does in fact rhyme, as it turns out. And I think I'm glad that, again, Rosie pointed that out, because for all the people that say the market is widening out in terms of participation, it's widening out. Yes, banks are clearly participating without question. You're finally getting some participation with some of these pharma names, and even some energy names are picking themselves off the mat. But
until today, by the way.
Until today. But the flip side of the coin is, you are seeing weakness around the edges. And real quick, if we could throw up a TLT chart, and I don't want to bore people too much, and we'll look at futures, but if Amanda throws up a TLT chart and draws an uptrend line from the May low and then connect the low that we saw, I believe, in September, you will see that we are approaching this uptrend line. Look at that. And so pretty important level. Now, why do I mention it? Because you have a 200-day moving average. It is at least flattening out, if not sloping lower. We're obviously through it. We're talking about, Dan, in my opinion, some pretty important support levels here in the TLT, which, by the way, I think will be broken to the downside because you know my view on rates. But if you want to play stock market here, this is your level of support.
Well, or bond market, by the way.
Or as it turns out, or bond market. Yeah.
Let's throw up the 10-year. But you know what? The truth is that ETF trades like a stock.
Yes, it does.
Fair? Okay.
Yes, sure.
So, and this is, we talked about this 420 level, not 420 like you're very familiar with, Guy, but the 4.20 percent.
Right now, for a sec, I want you to stop for a second because I have learned over the years that apparently 420 has something to do with marijuana and people that sort of enjoy marijuana. I will tell you, because there might be new people here. I don't want to confuse anybody. I've never puffed the Magic Dragon, nor will I ever puff the Magic Dragon. As a matter of fact, as I've said about other things, my physician, and I will dox him, his name is Tony Ciosi. He's about 5'3", runs every day. I love him, by the way. I could fit him in my purse. He could call me up now. The phone could ring. I could pick it up and say, "Hey, T, what's up?" He goes, "Listen, I got something to tell you. If you have to smoke the ganja by the end of the day or you will die tomorrow." And I will tell him, call the mortician and have them make the box because I ain't smoking that shit. Back to you.
There might come a day if you have the glaucoma or something like that, you might do it. Hey, Guy, go like negative. Go like this to your shirt.
You need me to fix my fit?
Well, yeah, just yeah.
Well, I'm a wise person.
Better that looks, and then pull. Yeah. So. Yeah, on the yields, let's go back to that for a second. You showed us the downtrend. Listen, I guess the point is, Carter says this is a pair of twos. Let's go to a 5-year. You know what I mean? Like the 10-year has been stuck here. I think it's important to know that we've seen Fed funds go from basically 5% on the upside to 3.75 expectation. This is the thing that I'm shocked about, Guy, because was it a hawkish cut last week? Was it a dovish cut? Are they doing QE again? All this sort of stuff. I mean, it's about as clear as mud, right? If you think about it. But yields on the 10-year didn't move. And I think the technicals that you're highlighting here, they speak to a slightly listen, if you thought the jobs data that we got, which is obviously delayed, if you thought that was good, you're willing to X out the 4.6% unemployment rate, that's what you shouldn't do. You shouldn't do, but sooner or later, something's got to give here. I guess. And then is that the thing? If you see 4.5, the last, on the 10-year, what does that mean for stock market valuations? That sort of thing. So again, I just think that for whatever reason, I think there's a great deal of complacency out there, despite the fact that there's a lot of macro stuff that's really moving around here. So let's go to the Dixie, the US dollar index, because I think, this gets us to gold. It gets us to Bitcoin. It gets us to commodities here a little bit. And, the dollar moving like the way it has of late, you would say that's somewhat consistent with a lower Fed funds rate, right? Weakening 10-year, that sort of thing. But I don't know what it represents. You know what I mean? The dollar's been weak going back all the way to last spring.
To me, it represents, and this was a theme for a while, earlier this year, it's gotten away from it, but sort of this de-dollarization and people trying to move away from U.S.-centric things, and for a lot of different reasons, none of which are important right now. But I think that trade took a pause, clearly, in the fall. You saw the dollar bounce. By the way, if you go back and listen, both you and Carter thought that it would, and that was actually a really good trade at the time off those double bottoms in the Dixie. But now, to me, it's starting to sort of reassert itself to the downside. And there was a period of time this year where Janet Yellen, actually on one of the Sunday shows, I think it was over the summer, talked about how she was seeing weakness in the U.S. dollar and weakness in the bond market, which typically are not associated with one another. And I think you're starting to see it again now. So if you see a weaker dollar, which I think you will continue to see, I think that's obviously supportive of gold. And I think you're going to see a continuing weakness in the bond market, which is suggestive of something else entirely. Bond yields going higher is not because the economy is doing well. It's something far more nefarious, in my opinion. And, look, S&P at current levels clearly does not indicate that, but these things have all been happening. They happened earlier this year. They went on pause. They're happening again. I think people have to start being aware of what's going on, to your point, under the surface with some of the macro stuff.
All right. And so let's take the weak dollar to crude oil. Okay. So when you think about this, weak dollar usually means higher crude. Higher crude could suggest a couple different things: greater demand, which is greater economic activity going on, which should be obviously good for the economy, right? And if it's good for the economy, then you're likely to see lower rates, right? Is that, we can kind of draw the through line here, but the weakness in crude married with the weakness in the dollar, is a difficult situation. Now, you would say that in this environment where we have inflationary pressures, right, a weak crude oil should be good, right, for businesses as a major input cost. It should be good for consumers, right, who pay at the pump. We are seeing, a gallon of gas at the pump nearing, I think, multi-year lows. I think it's probably, maybe these guys can go to the Gemini.
No, fair, all fair.
Yeah, no, I'm just throwing it out there. I'm not telling you, right? A weak dollar is good for U.S. multinationals. So think about it this way, okay? So lower yields, borrowing costs are lower. Lower input costs as it relates to commodities like crude, good for a business. Lower dollar is good for multinationals, right? So weaker dollar, you get more for, what you're buying and what you're selling and all that sort of stuff. So, there are tailwinds for S&P earnings growth. You know what I mean? And you can see the potential for inflation possibly moderating. Now, I don't think weaker yields and weaker dollar do that exactly. Is that fair?
Yeah, it is fair. And, you're picking crude oil, which I think probably is still the most important commodity in the world for the reasons you just talked about. And listen, lower crude oil is probably suggestive of supply demand imbalances the wrong way, but it also probably indicates some global weakness around the edges that, again, markets are not pricing in. Flip side of that coin is, if Amanda can pull up a copper chart, which is probably the second most commodity in the world, look at what copper has done recently. Copper's been on its horse to the upside in a pretty meaningful way. I mean, look what it's done since August. So you obviously had that huge move lower in August for a couple different reasons, but it's getting right back on the horse. So copper, very important. And silver, although people say it's a precious metal, there's a lot of industrial uses in silver as well. And obviously we talk about silver all the time, and you see what's going on there. So through the lens of silver, through the lens of copper, through the lens of a couple base metals that we never talk about, nor should we, there's the flip side of the crude coin. So it's hard to sort of get your arms around really what's going on the inflation front. I will tell you, I think if you really ask these Fed officials, I think they'd be shocked. They are shocked that inflation is still as sticky as it is. And we can talk, people can talk about inflation going down all they want. The reality is, and I'll say it again for those playing our home game, inflation is not going down. Inflation is going up less fast than it was. And that's not nuanced. That's not me being glib. That's just factually what's happening. When you see inflation negative, that means inflation is going down. And we're obviously nowhere near that.
Yeah. And, the one thing that I have not understood, and you heard Fed Chair Powell said this at the press conference last Wednesday, the tariffs are a one-time price adjustment. And you'll hear that companies are now dealing with these higher, prices. Well, are they?
Not well.
I mean, like that's kind of my point. Like, if they have to pass through these price increases that were one time, I don't understand that. And then to your point about, stuck at 3% in the CPI, I can't remember who the hell it was. And these people think we're freaking stupid. Okay. I can't remember who it was it was Scott Besson, who I'm increasingly thinking every time he opens his mouth is a moron. I mean that, because he instills absolutely no confidence. And for a guy who's made billions of dollars investing in macro, when he was a hedge fund manager, he says things to the American people that are just intellectually dishonest. Mm-hmm. They don't line up with economics. They don't line up with the way funds flow. You know what I mean? All this macro stuff. And I'm not telling you we're smarter than him. He's sitting there as the head of the Treasury. One thing I'm certain about, though, is that he is lying to the American people about many different things that I know he doesn't believe, because they are against the principles of investing that he had implemented for decades, you know what I mean, as a hedge fund manager. And so when you think about this, you think about, well, he's like, well, we're looking at different components of the CPI, that lead us to believe that inflation's going lower. And it's just not how it works, right? So we've seen goods inflation go higher. We've seen services inflation go higher. So what are you seeing going lower? Crude oil, fine. But to your point, that does have a supply demand dynamic. You know what I mean? Like to it. So I just feel like the one-time price adjustment doesn't make any sense. And it doesn't make any sense from a cumulative basis for the folks that are dealing the worst with inflation, with the
Yeah.
worst of higher prices.
And well, I'll pull up two stocks that I'm not cherry picking because I think these are both very important companies. First one I'll throw up is General Mills. So Amanda, GIS, pull it up, the 5-year chart, and you will see that when inflation was sort of ratcheting higher, it really was great for companies like General Mills. And then when they could no longer pass on the cost to their end user, the consumer, obviously things went pear-shaped in a pretty meaningful way. Now, by the way, the stock has been cut in half, okay, just for clarity here. And this is against a broader market that's done extraordinarily well. And now pull up a Procter & Gamble chart, and it's going to look very similar. I mean, this is a stock that's obvious. We talk about it enough, but, look at what's happening here. A little bit different. This basically, they started to feel the impacts a little bit later, but it's the same thing. I mean, this stock has gone from about 180 down to about $1.45 or so. And again, I think the primary reason is because they can no longer pass the costs on to the end user. So to your point, it was a great thing for companies for a period of time. It's a really bad thing for companies now because they're no longer able to pass that cost. In addition to that, if they try to do it like Walmart said they would try to do it, they're going to hear it from the administration, which is something you don't want to get in their crosshairs. Now, Target has recently bounced, and maybe it's just a little bit of a catch-up trade. So pull up TGT, and you could say, you know what? Maybe we're through the 200-day. Where can this go? I'm not inclined to believe it yet, although I understand why people would start to think that maybe you're going to see a bit of a relief rally here. In my opinion, there's a couple of names that continue to work. Look at the dollar stores, Dollar Gen we talked about for a while earlier this year. That had a pretty significant move to the upside. You see what's happening there. I think we did a good job on that stock. Talk about Walmart all the time, which I do think is going to take the next leg higher. And we talk about TJX. So there are retailers that this environment absolutely works for.
Yeah, throw up this chart we had made. Amanda made this. It's Walmart versus Target, or Walmart versus Costco,
Yep.
on a one-year basis. And, this is a really fascinating sort of chart. And Amanda had it longer term. These things were obviously tracking each other. And, a friend of ours, without doxing her, we were talking about, why Walmart's trading at all-time highs, why Costco's trading at least 52-week lows. And, she was saying that she shops at both, and Costco no longer has the value in bulk, that a lot of Costco shoppers have come accustomed to. And because now these big box guys, they're doing so well with their shipping, same day or whatever, you have the ability now between Amazon, Walmart, Costco, other retailers to really cost compare. And so maybe that's something that's going on here. Again, I just think that's a fact. Listen, guy, at some point, I know you think, you just said Walmart's going to take another leg higher. I think this spread will close. I think this is probably a pretty good pairs trade. Now you could say, well, maybe this is the right time, but maybe it's 2 months from now. You know what I mean? Like maybe this divergence continues, and they're both expensive stocks for what they do. Like we've been talking about that forever, but it hasn't seemed to matter. You know what I mean? If you're telling me Costco's going down now because of its, trading at 45 times, well, why now? You know what I mean? Like that doesn't make,
No, look, I think you make good points. The question is, how does it resolve itself? And I think, look, there are a couple of different ways. Costco can go higher, and Walmart could go down at the same point, and they meet in the middle. It could be just Walmart falling off a cliff and then catching up with the underperformance of Costco, or Costco gets on its horse and catches up. I mean, those are the three scenarios, right? I mean, logically, it would be that Walmart sells off and Costco rallies, and they meet somewhere in the middle. I will tell you, and you made some good points about this, and I don't want to get too much in the weeds, but if you go back and listen now, the last 4 or 5 reports from Walmart or read them, AI has been a boon for them in terms of what it's been able to do for their margins. Now, you'll say, well, they've always had some form of it. Yeah, but I think they've really fine-tuned it. And you're seeing it. Listen, you're seeing it in the margins without question, which is why I think they're probably deserving of the valuation. But that's for another time. But you're right to point out this significant discrepancy between the two.
All right, let's go back to General Mills for a second because I just see, guy, it's reporting tomorrow, and what's interesting to me about this is like, okay, here's, like you just said, the equity's been cut in half. The debt is like $15 billion versus, let's say, a $25 billion market cap. I think that's what we have here. And earnings growth has basically ground to a halt. Like low single digit sales growth is, expected to be flat. So you have a $25 billion market cap. You have basically nearly a $15 billion in debt and just a little bit of cash here. And so, again, this is a company that's not growing. I wonder if you're going to start to see some consolidation in this space, right? So if you've gone through this period where when inflation was 9% and these companies were, they were just, hand over fist, right? They were raking it in. Now you see a stock like this, it trades at 12 times. And, what could be the impetus to kind of reaccelerate growth? I'm not sure, you know what I mean? But this is a consumer staple and we've seen staples weak. And maybe that's one thing that Costco is representing. It's the second largest name in the XLP, the ETF that tracks it. But at some point you could say it's a value trap. You know what I mean? I don't know, but I would expect some consolidation at some point.
Yeah, or you get some activist investor that takes a look at this, understands the brands associated with it, thinks he or she can come in and make a difference, maybe get a board seat. So, you get an activist stake or somebody like a Warren Buffett that takes a stake. I mean, that's the play. Is it going to – I don't think you're saying it's going to be acquired necessarily, but there's going to be a point in time where it's just too compelling. But the reason I brought it up is just to see how when things are going great and they can basically pass on costs and their margins are wonderful, everybody's partying. When they're no longer able to do that, you see the other side of the mountain. That's what we're seeing now. I think we should go to gold real quick because it is a CME day. And, I think the correlation, to the extent that anybody ever thought there was between gold and Bitcoin, I think we can put that to bed. Gold's at a pretty critical level here, though. I will say, you got to take out the highs we saw in the fall. It is still fall, I guess earlier in the fall, I should say. And we have to do it in a pretty meaningful way. I think we will. But you're getting to sort of I think the bulls have been proving themselves. I think it's time for the bears to take a shot. The bulls need to get it to close basically above, let's just call it 4,400, 4,500. And then I think we're looking at the next leg higher, which I do think is going to happen.
Yeah, and we have a log chart, like I want to say 20. Look at that, man. I mean, that's a 30-year log chart. And just for those folks, and again, you're the gold guy, I'm not the gold guy. Look at that move from 2000, you know what I mean, up to, right through the financial crisis. I mean, when you're talking, what is that, $200 down there? And
well, I mean, what did we talk about? And you made fun of me. The brown bottom, Gordon Brown, the brown bottom.
Make fun of you because a brown bottom just seems goofy. It just seems like something that maybe you have to go to.
The man's name was Gordon Brown.
Hey, but you know what I'm saying?
Amanda, or Jacob or Cece or Timmy or Bill, whoever's actually doing something right now, go to the Google machine and look up brown bottom and put it up here because you'll see. Now, juxtapose that with a brown bonnet. Now, when I was a kid, there was a Carvel that opened in Ossining, New York. Dan is like, I can't believe you're doing it. But,
That's where Sing Sing is. That's where
the name of the town used to be Sing Sing.
Yeah.
And then they changed the name of the town because they didn't want the association with the prison. Now, for you folks that remember old movies, there was a term called send him or her up the river. And the river they were referring to was the Hudson River. And sending them up the river, you're sending them to Sing Sing. That being said, I think I was a sophomore in high school. Carvel opened, and I worked at the Carvel. Every once in a while, somebody would come in and ask for a brown bonnet. Now, that is, you get a cone, you put the ice cream in the cone, and then you turn it upside down, and you dunk it into this, like, chocolatey thing, which then hardens around the ice cream, and you hand it to the patron. Problem, of course, is many times the ice cream would fall into the brown bonnet. So there are a couple things that I would do. One, if somebody asked and I didn't like them, I'd say, we're out of brown bonnet, bitch. Get something else. I didn't do the bitch part. Or B, the trick would be you fill the entire cone with ice cream, not just the rim of the cone, and that creates a seal. So when you turn the cone upside down, the ice cream will not fall in. Back to you.
I am more of a flying saucer guy from Carvel, but okay, so the brown bottom is interesting.
Gordon Brown.
You saw 200 to 2000, right, over like a 15-year period, which is pretty fascinating. There's cool. Can we put that in AI mode, please? I know that Guy
What is that
prefers
even? That is AI mode.
No, Guy prefers AI mode. The fact that someone on our team is still doing, what they're doing, that was an overlay, I guess, but
Anyway, Gordon Brown. So the backstory is they had all these reserves. He sold half of their reserves, and he was going to buy the euro with it. It might be the worst. As shitty as I am, and if you watch Fast Money, you'll know this might be the worst trade in history. Back to you.
Well, you know what they say about when you try to pick bottoms in the market, Guy? You know what you get? Stinky fingers. All right. So moving on from the brown bottom. So you showed us the gold. It looks like that little flag, it looks like it's going to bust out. Okay. And it's doing it as the dollar looks like it's going to take out that kind of 97 level, maybe on the way back to 96, which was the level, I think, at the lows in April. Again, I know we're jumping around. We're going to get to some earnings in a second here. I want to hit Bitcoin. Let's pull up the Bitcoin because it's getting a little bit of a bounce here, but man, this seems heavy. And had a little bit of a rant on Fast Money last night. I'm sorry if you think I was a little dour, but I really feel like this thing is going back to the April lows. I think it's probably you've been making this point. Yesterday, MicroStrategy bought another $1 billion worth of Bitcoin. I don't know where they're getting this money from. I mean, I know they borrowed a lot. They created this dollar fund to pay these dividends and the perpetual preferreds, and they have interest payments and the like, and they have no choice other than to keep buying it. But that average is what, like you said, 75,000. Yeah. And right now, it's gone from 125 to 90. You can do that math. It's like 30 something. But, going back to 21 to the lows in 23, the thing sold off 75%. And now you could say there's so much more leverage, you know what I mean, in the system. So at some point, something funky is going to happen with these treasury companies. I don't know why they need to exist. I literally can't come up with a single reason. I know that there's some out there, Dan Ives, who's going to be on the podcast from Wedbush. And I'm going to ask him again. I've asked him 2 times over the last 6 months. He went on the board of a company called Orbs, and it's a Sam Altman backed thing. And they have an operating business. Okay. This is what a lot of them will tell you, whether it's Bitcoin, Ethereum mining. I think that's the Tom Lee one or this and that, whatever. To me, I just think you buy the underlying, you know what I mean? Like, to me, if that's your view, because I think we're very near a moment where one of these comes unwound and a bunch of others are going to come unwound. Does that make sense?
Yeah, it makes a lot of sense to me. I mentioned it yesterday. I'll mention it again. We did a podcast with Luke Roman last week. We're talking about some of the stablecoin stuffs and some of his concerns to the extent that they were pegged to the dollar. And if they break the peg, what happens and what potential could have on the treasury market. But in terms of Bitcoin, and I think we've been pretty consistent, my concern for a while has been what happens if and when Bitcoin trades down to the average price that MicroStrategy is long at. And I think they have about 650,000 Bitcoin on their balance sheet, which is a staggering number. I think, was that like 3% of all Bitcoin mined or something crazy? It's astronomical at an average price of 75,000. So if we get to that price, I think some really strange things are happening. And then I was reading earlier today, somebody did the math. Where does the entire thing go to shit in terms of liquidation and stuff? And it's probably, somewhere between 35,000 and 40,000. So again, I don't know where it's going, but I do think the market's going to test this for sure, Dan.
Yeah, and I just want to be clear about this. Something I mentioned, Dan, he is a friend, and I know that a lot of folks think that he's overly bullish on the AI trade, and he thinks that a big part of what's going on in crypto, they're going to have implications using AI and quantum and this and that, whatever. And it's fine. I mean, he takes the hard questions when I ask him, and he's done that. And so I think that's important for folks to hear it, whether you agree or disagree. Tom Lee, who joined this BitMiner, I don't think Tom gets asked the tough questions. He's on CNBC every day, and I don't really hear, and that's not an indictment of the folks or the people that are doing the interviews, I mean, like, it is what it is. I mean, Tom doesn't really come back on our podcast anymore. Maybe he watches Fast Money and hears some of the things that we have to say about all this stuff. And, that is what it is. I encourage some other folks to ask him, like, why does Bitminer need to exist? Like, what is the operating business? You know what I mean? Why do they trade like SPACs and penny stocks and crap, NFT crap, this and that, or whatever? I mean, I think those are totally, I said it last night. I don't know why they exist. Please explain it to me, because no one has done that. And if you ask Michael Saylor, and I give Michael Saylor a lot of credit, he's out there, he takes the tough, for some reason they ask him the tough questions, and then he'll go on like a 10-minute sort of thing, and I don't understand 9 minutes of it. Like, that's fair, you know what I mean? But he's out there, he puts his money where his mouth is. Whether it turns into a disaster is another story. I believe that these things will be the FTX of this cycle. And we said it yesterday. Carter and I were talking about it. So, and you, by the way.
Okay. Question time. This is from Bobby 1006, which I guess it's fair to say that there are 1,005 Bobbies ahead of him. Throw this one up. I get that's the only reason I see, unless he was born in October of 2006, which might also be the case. Either one of you plebes have interest in crude oil long in 2026. This is Bald Avenger stock trade. I love this. I will tell you, Peter Bookvar, to the extent that you've seen him on our shows or read his work, he thinks one of the non-consensus trades for 2026 is long the commodity, which is crude oil. So I love Peter's work. You know what? I tend to agree with him on this one. I know it looks far-fetched now, but Peter thinks in 2026 crude's going to have its day. So we shall see, Dan.
So before you were in the shit, you were called a plebe, right? Isn't that what they do in the military? Isn't that a name?
I believe that if you are a freshman at like the West Point or one of the academies, I think you're a plebe.
By the way, Bad Avenger stock trading, I freaking love that. And any of you guys,
Bald Avenger, not bad.
Bald Avenger. If
You
any
still
of you guys want to throw out in your Q&A, your questions, any other names like that, we're here for it. All of it. So let's get in there. Do it now.
It looks like there's a little Ed Harris. No, more Viggo Mortensen.
Oh, yeah?
If you look at the picture. Yeah. Which, by the way, is a compliment. I think Viggo's a stud. But he was in all those shitty movies with the
Lord of the Rings.
Ring.
He is not. He is not.
By the way, I don't know. Do we have Obi on with us this week? Because he obviously was in those movies as well. Did a great job.
All right.
He was the one with the Hobbit one that ran in the caves and stuff with Precious. Obi did a great job.
Like you've seen these movies, by the way.
I've been forced to sit through them. I will tell you, I can't discern the difference. It's all the same effing movie. It is all the same movie.
Like
I don't know what else to tell you.
No, for 10
and they have
hours.
these epic battles where they're like giant rhinoceroses fighting elephants and shit. Like why? But the battles last forever. There doesn't seem to be a victor or not. And then one dude with like a white cape, he always shows up and then he takes off and he falls off a mountain, but then he comes back to life. And then the one with no hair on its body, the thing that like that creepy looking thing, like scurrying around the caves and stuff. I mean, that's bizarre.
Yoda.
The whole thing, it's just dumb. And then the kids with the wands, and then they play chess with the real moving pieces. And then the one kid with the red hair sacrifices himself. For the life of me, I don't understand why Winona, what's the name of the girl in those movies?
Yeah, that's Winona Ryder from Stranger.
No. That's her name in the movie.
Yolanda?
Not Yolanda. She's Harry's friend, but she dates the red-haired guy. I don't understand what she saw in him. Hermione, right. Why she dates the red-haired guy. And then I think Harry Potter marries the red-haired guy's sister.
I don't know. I've never seen more.
But they're all the effing same. By the way, for those of you out there that say, Guy curses too much, and I definitely do. I apologize. And I'll try to be better. I will try to be better. I don't think I've cursed once this show. Maybe I have. I was flipping around the screen last night and I saw an interview with Lindsey Graham on cable news, and he just dropped a very casual bullshit. It's like the world, there are no rules and regulations anymore. We are so past it. It's unbelievable. I'm waiting for Dan to drop a bullshit on fast money one. I think you may have actually.
I did once. Lindsey Graham, and this is not political, is so full of shit. This guy, I mean, I love that supercut of Lindsey Graham.
Wait a second. Hold on a second.
What? The things that he had to say about our current.
Can we put that picture up that Bill Hochman? I don't know
where this create this.
Yeah, this is. I mean, again, see, that's the problem. That's the problem in today's world. You don't know if something's real. And I put this picture up.
No, this is Photoshop. This is pre-AI.
Somebody going to effort this or no? Am I going to sit here with my whatever?
Look at you, fixed your shirt.
Well, you just said, like, I don't smoke, number one. I don't know what that, and who's the guy with the clock around his neck?
Oh,
Dr.
that's
Dre or something?
No, it's not Dr. Dre. Is
it because he needs to know what time it is? By the way, if you want to watch something really funny, Bill Hochman does these things with this guy Claude that are just off the charts funny.
Clyde, by the way, Clyde. So go check out Billy Hochman on the Insta. Guy, I want to do I know we got to get out of here in a couple minutes. I just wanted to go back to really quickly. We were talking about crude oil and we were talking about supply demand, this and that, whatever, and what it could mean if it's just a demand issue versus, So go to nat gas for a second, because this is one, this is going back to 22. We were almost 4 years on, Guy, of the invasion of Ukraine. Look at it filling in that gap. Yeah. And, that's another one. Is it down because we might have a ceasefire or some sort of agreement in Ukraine? Maybe, that sort of thing, hopefully soon, by the way. And, I just think that's another one that's interesting to look at. And then
nat gas is amazing. So the run up was probably in anticipation of this sort of Arctic freeze around the country. And it's one of these buy the rumor, sell the news thing. And you're giving the entire thing back. And then if you want to look at stocks on the back of this, EQT is a name that's going to mirror this. Had a huge move up to, I think, 62. And then as nat gas started to do this move lower, look at what EQT has done. I think it's gone from 62 all the way down to 53. Now, the good news is I think we stop at the 200-day moving average here in nasty gas. So, man, to throw up an EQT.
Nasty gas.
Oh, that's what we used to call it. But look at this EQ. Now, am I correct in saying it's the same chart, or that's nat gas? Look at EQT. Here it comes. Hold on. I spet. See what I mean? And run up and then boom, right back down. So this one, if you draw a little trend line from the September low, we're probably right at it. Maybe we've broken it on the uptrend. But yeah, I think this is one that you got to watch here if nat gas holds. Back to you, Dan.
I want to hit Oracle. But let's just throw up the earnings things again. We mentioned that there's going to be some, and I feel like tomorrow night Micron's going to be an event. We'll hit that harder, and we'll look at some options, later on, or tomorrow, some option strategies. I mean, Nike will be interesting to see what they have to do about consumer. FedEx will be interesting to see about the holiday sort of stuff. Home builders, KB Home. What did we have last night? We had Toll. Did we have Toll or
I think we had Lennar last week? I don't know if it was Toll last night or not, so I apologize.
Yeah, no worries. All right, so Guy, I'm just before literally this is the last thing.
FedEx.
You see that? Well, no, let's do that later in the week. You is that tomorrow or when is it?
Thursday, I think.
Okay, we'll hit that Wednesday. So you see the semis here today, okay, and they're all down. And I'm looking around and I'm saying to myself, okay, the air is coming out. This goes back to the breadth thing. We have an S&P that's down how many basis points? 50 basis points. We have the NASDAQ, which is actually down less than the S&P, which is not something we've seen of late. You see the lines that we drew on the SMH is still showing good relative strength here, 375 or 374, whatever you want to call that, is kind of a double top-ish sort of thing. So it'll be interesting to see if it breaks that uptrend, 327, and gets down to that breakout level of 300. And you see the 200-day will probably be up at 300 if it does get there. So pretty decent support level. But what do you make of it? I mean, you do see Broadcom was up like 2%, Guy. Now it's down. It's had 2 really bad days. Like semis are really, in my opinion, driving the train. And Micron after the close, which is obviously memory, tomorrow after the close will be really interesting too.
I'm not a hater. I'm not, but the fact that Micron is where, we've talked about this a lot, the number of standard deviations away from the 200-day moving average, and a highly cyclical name like Micron doesn't make sense. Now, people will say, Guy, you're missing the boat. It's no longer a cyclical company. This is sort of a paradigm shift and, all those different things. And if you look at Micron and SanDisk and some of the other memory names, it certainly appears that way. Problem, of course, is I don't think that's what's happened, because historically, this is a stock that basically trades either side of the 200-day moving average. And that's been true until the fall, earlier in the fall of this year, where it's completely divorced itself from reality. Now, I don't know what they're going to say. I mean, maybe the street loves what they say. Maybe they say that DRAM pricing is still robust and it gets back on its horse. But man, oh man, this is deep end of the pool shit for sure.
Well, going back to Broadcom, which is a must-love name, much less cyclical, much more attached to, this whole AI, chip trade. The memory is obviously very important. That's something that kind of joined the party, I want to say, about a year ago, and this was, late from the GPU names or the custom silicon names, that sort of thing. But to your point, it was probably being underappreciated, just like Dell also, because these are really low margin businesses, so the Dell's the servers, the memory goes in the servers, and the servers go in the data centers, and yada, yada. Let's see if Micron is not able to put up a big beat and raise, it's lights out. I mean, and that was the story for Broadcom. I mean, when I say lights out, let's go back to that Micron for a second. You saw that double top. I mean, I don't care that's 11.5 times earnings. This thing has been single digits earnings. It's going back towards those recent lows, which is under 200. So again, we'll look at some options. They're not easy tomorrow. I just want to be really clear about that. So, all right. But then the last thing I want to go from the semis guy to Oracle. And I know we're beating this to death, and we've been doing it for 4 months, by the way, since that announcement, the OpenAI thing. And you keep hearing us say, hey, Sam Altman, we're all counting on you. Well, I think it's becoming closer and closer to something that there's, something's got to give here, Guy. And so I don't know how, if you are an investor and really focused on this AI trade and you believe in it, and you look at what's going on here in the equity, and you look at what's going on in the CDS market, right? And you look at how much debt they're going to continue to have to raise, right, to do this build out. And then you've said this, and I'm going to keep saying it, the sanctity of this capex. And we've been saying Oracle is going to be the patsy, and then CoreWeave, these neo clouds, meaning patsy, the bag holders. And that's what's happening here in Oracle. And I'm not going to say that. I bet that it's going to happen in CoreWeave in the not so distant future.
Well, I mean, it certainly appears that way. And I think more and more people are starting to come around to the notion that, hey, wait a second, maybe this CapEx spend is not etched in stone. And if you see a slowdown, companies might start to pull back, which might actually benefit some of the companies that talk about it. But it's going to be really detrimental to the companies whose livelihood depends on it. And obviously NVIDIA is in the middle of that. And I'm not a hater, but NVIDIA at this 176 level, it's not been trading particularly well. And when it didn't bounce on the back of that China news, or the bounce was, short-lived at best, to me at least, it told you everything you need to know. By the way, you a fan of the Beatles?
Ish.
So 8 Days a Week was a single release. Do you know what the B-side of that song of that was? You don't know. There's no reason to know, but it was, I don't want to spoil the party, which is what you just said. I don't want to spoil the party, so I'll go. I'd hate my disappointment to show. Back to you.
I know Doug Cass, our friend from thestreetpro.com.
Big Beatles fan.
He's going to be very disappointed in my answer there.
I'm not a huge Beatles. It's funny. I'm not a huge fan, although Spotify tells me that the Beatles are my second favorite band, according to listening hours.
Yeah, I just feel like all this stuff in the early 60s, the, British invasion-y sort of stuff, like, not a fan. I like Sgt. Pepper's once they started,
more psychedelic-y stuff.
Once they started, smoking or puffing the Magic Dragon.
Well, it's funny. When the Beatles, Paul McCartney specifically heard Pet Sounds from the
Beach Boys, that did it for him.
He's like, oh, we gotta ratchet up our game here. God Only Knows, I believe, was the song that really was eye-opening.
Yeah. I mean, all right, so this might be controversial.
When Dan says, yeah, like that, it means he's just...
No, this might be controversial. and I think you're going to agree with me. I think as much as the Beatles are overrated, the Beach Boys are underrated.
Wow. So that's like a pairs trade. So
It's
the
like
Beatles
Walmart
are
and Costco.
Walmart.
I mean, do you agree with that?
I think the Beach Boys are underrated. I think the influences the Beach Boys had on other bands cannot be dismissed. I think the harmonies of the Beach Boys will never be replicated. I think the genius of Brian Wilson is, in terms of a songwriter, he's in a league of his own. It's unfortunate that he had, obviously, the issues that he had. Mental health is a concern around the nation. But, I mean, Beach Boys, my God. I mean, I think I probably have 9 or 10 Beach Boys songs on my Spotify playlist.
First concert I ever went to, and I've seen hundreds of concerts since, was the Beach Boys at the Garden State Art Center.
Sure.
I think in 1980 or 81, my parents brought me, and it was a great show. It was fun, and that got me hooked, got me hooked on the live music.
You smoke a little weed in the bathroom that day?
No, dude, I was like 8 years old. I was like 8 years old. I mean, you know, there might have been some secondhand contact sort of stuff. You know what I mean? But I didn't even know what it was back then, Guy.
The Beach Boys or weed?
Weed.
1981, I was a junior in high school, I believe.
If I was 8, what grade would I have been in? 6th grade?
Well,
No.
you add 5 plus 3, so you're in 3rd grade.
Is that the thing? 5 plus 3?
Well, 8.
You
take
know,
whatever the number is. I'm 11 years old. What grade are you in? 6th grade. 11 minus 5 is 6.
I can't
I
remember.
think I'm making this up. I mean, now you're thinking
By the
about
way,
it.
yeah, you'll love this. And you know, Kavitha, who's one of our producers on Fast
Sure.
Money,
Watching now, it turns out.
she and I went to the same elementary school.
Stop it.
Do you know what that it was in Middletown, New Jersey. Do you know what elementary school that was?
Abe Beam High School.
What elementary school? Nut Swamp Elementary School.
Pardon me?
I'm not lying to you. Nut Swamp Elementary School.
Nut Swamp.
Yeah, I have a picture.
You know what I would have done first day of school every year? I would have brought a thing of like talcum powder.
Nut Swamp.
That helps with Nut Swamp.
If we can wait a minute,
put some powder down there.
If
no, we got it. We're not going to wait any. We got to get out of here. But Nut Swamp. Nobody saw a problem with that.
Sarah and I were coming back from
Nut Swamp High School,
Princeton. We went to a lacrosse game in April, and we stopped in Middletown, and we went to Nut Swamp because Sarah didn't believe that existed, as you don't either.
There's a high school. There's an all-girls high school in New York City. It's very prestigious. The name of the high school is Brealey.
Yep.
You know what they're?
Whoa. See?
That's unfortunate. That really is unfortunate.
By the way, that is absolutely amazing. Jacob, this is all you, baby. I think it was all you. You know what was really cool? So when we went, I looked into my classrooms, and when I tell you everything looked the way they did 45 years ago, it's pretty amazing. Like that place was like trapped in time. It still is. Like, the buildings absolutely, they still had the same little chairs and little desks and all that sort of stuff. The little things posted on the wall, you know, like the alphabet or like the presidents or, you know, some piece of crap artwork that little guy, you know, drew or something like that.
Well, you know, you think about Nut Swamp. Remember that scene in Greece when she said, if you can't be an athlete, be an athletic supporter. And at Nut Swamp, that took on a meaning of its own. Athletic supporter. Swampy nuts. By the way, the mask, I think somebody must have had a sick sense of humor. So this is an all-girls school. Let's see if Jacob can pull this shit up. Really? Their mascot, the Beavers.
All right. Let's pivot to.
No, it's not pivot anywhere. It's noon, and I got to take a leak.
You had your moment.
Think about that. I mean, are you effing kidding me? The Beavers. What's the dirtiest thing ever said on network television?
We know where do you? It's on the dating game.
No.
Oh no, not that. We can't do that one.
Which one?
The dating
In
game.
the butt? That's true. I mean, that is factually true.
All right.
No,
we're moving on.
Leave It to Beaver.
Yeah.
The mother says toward the husband, I think you were a little hard on the beaver last night.
So this was a fine program here today. We did a lot of the macro. We talked about a lot of relationships.
I'm not making this up, by the way.
With the weakness in the dollar. You were a bit of an Eddie Haskell sort of guy. You were like a little bit
not. I'm not Eddie. No.
A little bit of a troublemaker.
No.
You saw that show First Run, right? Like you were.
Yeah, hell yeah, I did.
Yeah. I used to watch that show. It was in syndication by the time I was a kid. Listen, thank you everyone for being here. We will be back tomorrow at 11 a.m. We do have a great interview in the Risk Reversal podcast feed. It was with Louis Vincent Gave. We covered all things China, chips, trade war, and the like. That was on Monday. Check that out. It was one of Peter Bookbar was with me. Guy and Liz Thomas from SoFi, they had a pod drop today. That's going to be in the podcast feed, so check that out. So a lot of good stuff here this week. We have Dan Ives, the aforementioned Dan Ives. We will talk about some of these treasury strategies. We have to. He will answer them, and then we'll talk about the AI trade and a bunch of stuff. My good friend Adam Sigoldu runs a ad tech company called Taboola. He's the CEO, is publicly traded TBLA. He's going to be on with us. We're going to talk about AI and ad tech and all those sorts of things with Dan Ives, actually. So check it out. We'll be back here at 11 a.m. before Guy can get any other not safe for work comments out. Should we just leave? I think we should just leave. Thanks, G Swizz. Thanks, everyone, for being here. Thanks, Bald Avenger, whatever. We love you. See you.